This is another episode of me documenting the day-to-day process that I am taking to achieve long-term consistency in the financial markets. And if you look at the background, you've been watching me for a while, you can see that it's quite different, right? Well, I was so down bad mentally that I packed everything up out of my grandparents' house and I drove all the way back home. So if you've been keeping up with my videos, you know that I was making a decision between number one, moving back with my parents, or number two, getting my own apartment. And today, I think I eventually just reached a breaking point where I had to do something and I couldn't sit on the indecision that I was dealing with. And if you can hear my dog freaking out, I apologize, but you might hear that a few times during this video. I couldn't handle it anymore, and it was definitely weighing me down mentally. So I had to do something about it. Like me personally, I can't sit in states of indecision. If there's like something that's pending or coming up, like for example, me having to move out of my grandparents, I have to just go ahead and get it out of the way. I can't have that sitting there because I just have to do something about it. That's just how I am. So that weighed me down mentally this entire week. And although it doesn't feel like it's directly influencing the way that I trade, I can definitely feel it kind of taking a step back and looking at how I'm performing. Because today, I had basically like a mental meltdown because the market left without giving me a fill. And I can just feel it. Like you can just feel the weight of what's going on outside of the markets when you're trading. And so I've had my worst week of trading in the past 2 months this week. I didn't take a single winning trade. I've taken one winning trade this entire month. I'm taking more trades. I'm losing more and I'm risking more. So I'm striking out big time. I mean, this month has been tough. I'm sure you guys know if you're trading, it's been pretty fucking rough. So I'm already down 1.68k on the week. That's easily my worst trading week that I've had in a really long time. So if I think back to this performance back in June, I was kind of trading with no pressure. I think this is what was going on. I was at my grandparents' house. I was settled in. I was doing fine. At the same time, I was trying to figure out exactly what my model was and eliminating the cycles that I kept falling into. This is a good trading month right here. Look at this. And it just went downhill from there. Now here we are, August. Gave back everything and then some. So not good. At the same time, I'm hitting a low, extreme low, mentally. You can feel the weight of it. But what does this mean? It only means that I can grow from here. It's just the ebbs and flows of life, right? You're not going to be high all the time. You're not going to be low all the time. When you hit a low, though, you're constantly making higher highs and higher lows throughout your life, all right? Look at your life as a fucking uptrend. You're making higher highs and higher lows. Right now, I'm pulling back, and I'm just rebalancing to equilibrium of the previous impulse swing that I just made. Right? That's how I got to see it. And I got to keep my head up and keep working. But now here I am. I'm back home. Different environment. I basically deleted my room. I took everything that was in this room that I left before I left last time, before I moved out, and I threw it away. I cleared the space, cleaned the space. It's bare bones in here. I just have my necessities, the things that I need to live, and that's it. And I'm ready to work. I'm ready to figure out my problems, and I'm ready to build this model, and I'm ready to keep working on it, and I'm ready to go. So here we are. I got 10 months until I graduate school, and then I officially have to fend for myself, paying rent, food, gas, car insurance, car payment, everything. And I'm basically paying the most of that right now, also having to pay for my school. But once I graduate, then that's that, So we got around 10 months left. Can I make it work? 100%. 100%. Just on a low right now. Can't stay down forever, can I? Absolutely not. It's not how it works. Can't stay down forever, folks. Keep that in mind. So you can see that this week has been rough. Easily my worst week of trading in a really long time. So what did I do today? Let's break it down. So, coming to the market today, I thought to be bullish, I thought to be bearish, ended up going with the bullish idea. Although I could definitely see a reason why for the bullish idea would play out. I went with the bullish idea because of what happened last week, and just I thought the weekly profile was going to be similar to what happened last week. So here's my higher time frame narrative. Here's what I established. Let's go in here instead. Development of the weekly range is bullish, but price seems to be falling into consolidation now. I like how it's closed above the daily BISI, indicating strength. Since price appears to be in consolidation and yesterday's settlement is bullish, I would like to see market open low in the day, take overnight lows, and look to buy. Market criteria. It's inside the middle of yesterday's range and lacks overnight volatility for the most part. It's not looking like a high probability trading day, so I must be slow to execute unless market opens at the low of day. How it's setting up, I'd like price to complete the half circle, then look to be a buyer. How is it going to get to the draw in liquidity? I favor a drop below overnight low to make a new low a day, then trade for London high. What setup am I looking for? I would like to play negative. I meant plus right here. Change it real quick. Oops. Plus DGO targeting London high. So obviously the market did not go for London high at all, and it just left right at 930. So let's figure out why it did that and why this bias was incorrect. That's what I do at the end of each trading day. If I get the higher time frame narrative incorrect, you better believe that I'm going back in there at the end of the day and I'm figuring out exactly why I was incorrect and what I missed, what I didn't read, and why what happened played out. Let's go to the chart. Pull up a 15-minute chart. There's no executions today, so we can just log out of this. Check the drawdown. Negative 2K. Nice. Very nice. Alright, let's take a look at how this weekly profile is developing. How we ended up closing on the week is basically indecisive, right? Drop down to the daily, we can see this is what was kind of sus about this week being bullish the remainder of the week after Tuesday, because we had a close lower on Monday, which is exactly what you want to see if you are bullish, and then a large up candle on Tuesday, which is also what you want to see if you're bullish on that weekly range. But Tuesday did not take Monday low, it left that smooth. And if it leaves that smooth, there's going to be sell side liquidity there, which means market has a strong probability of drawing there. And then Wednesday, how Wednesday closed with this larger premium wick, how it traded up initially but closed lower, it's not very bullish, is it? And we leave this gap, and Thursday trades down into the gap, also trades down into the down candle. Both of those should support price if we're bullish, but it fails to sustain any rally off of that, which means Friday just stays weak, stays heavy, and then goes for Thursday daily low. I think the market could probably draw back down here, maybe sometime later next week. So today in the overnight session, or not in the overnight session, in the pre-market session, when I'm looking at how I'm going to frame my buys today, what I'm going to do, I can see that the 2 o'clock candle is a large down candle that overlapped these up candles. And you can see that the market is just failing to sustain a rally off of this gap right here. So this gap's in congruence with the daily gap, right? But the market's failing to sustain a rally off of it. You can see that the up candles are small bodied in comparison to the down candles. They're just large, full body, clear, obvious down candles. Boom and boom. Compare that to the up candles, and you can kind of see what the real move is. Where is the strength in the market? The strength is to the downside. Look at these large, solid down candles comparison to the small up candles. So I'm seeing this and I'm thinking, you know what, I could probably go lower, but I want to play the idea that this weekly range is probably going to be bullish. And seeing how Thursday closed on the daily time frame, to me that seems like Thursday would Friday would more likely be a consolidation because of how Thursday closed. Wednesday closed small body candle, Thursday closed small body candle. So on Friday I was not looking for a continuation to the downside. I was going to look for it to close something like this because of how Thursday traded. So I see this overlap and I think, you know what, market could probably trade up into the up candles and close lower, but because of how this candle closed, wasn't really looking for continuation to the downside. I was looking for more of a close back inside the range. So on the hourly, we can see that, get this out of the way. We can see that we have this large separation on the hourly, right? Market trades up into that. Now, because the market didn't leave it on this candle I thought that there was a strong probability of the market trading down, clearing out the sell side here, and then trading higher for this high right here. Because I felt that if the market were to go lower, it probably should just left right here. But it didn't. The candle traded down and still closed up inside the gap. And based on how Thursday's daily candle closed, I was thinking the market would more likely see a consolidation. So I wanted to see it take these lows and just come back inside the range, kind of like not really do anything. Maybe trade for Thursday daily high, if even. But the market just opened, went lower right for Thursday daily low. So on the 15-minute, we can also see that 1 hour gap is in congruence with this gap on the 15-minute. And this was the sign of weakness right before the open. This up candle traded up right to the midpoint, hit the midpoint, closed lower. The following candle does this as a result. So one thing that really helped me study price or learn to trust price, which is probably something that I should do again because I'm not really trusting the delivery in price recently at all, is just looking at how the market treats the PD arrays, how it closed on them, and then the subsequent reaction. So you can see how this whole move started with what? How this candle traded up right up to the midpoint of that, but closed below it. Then what was the subsequent reaction to this price action right here? It did this. Boom. Dropped. Heavy. So I studied the subsequent reaction, and that made my eye really key up on these things and trust that the market is gonna do something like this when I get a reaction like that. And it does that. Just folds over right at 9:30. So I wanted to see the market drop down, take these sell sides, and then look for a buy. I was going to put an alternate idea in my pre-market plan that if the market laid a strong gap over these lows, that would likely signal continuation. But I've been working on just looking for one idea in price and just submitting to that. So that didn't play out. Or that did play out. I just wasn't looking for that because I was trying to submit to my bullish idea. If we go back to my live trading check-ins, I saw the sell and it was so free, but it wasn't my plan to be a seller today. I'll have to continue to wait, though my bias could be clearly wrong. I see how price traded the pre-market range high, and knowing today is pending high impact drivers, may have the volatility get back up there. Even if I do miss a move, I am okay with it because there's no risk on. It's only 950, still waiting. So then, this is just me framing risk on trades in hindsight. See how it trades right up to that gap? Boom. See, if I have that gap annotated, perhaps it gives me this information. I can use that to frame a high probability sell idea on this down candle because it just left. It just immediately left right at the open. Down here is actually where I was interested in getting a fill, and because it just left without me, it actually drove me crazy. Because I'm just not right mentally right now. So this candle dropped on the news driver, did not take that candle's low, which was not something that I want to see. Whenever price is left smooth behind on something that I'm executing on, let's say if the market did trade down into this gap, but it left this smooth behind here, to me, my stop is in jeopardy because the market is smooth down here, meaning there's sell side liquidity below those lows, meaning there's a reason for the market to go back down there. So this trade's not necessarily high probability. So I put my limit order here, just kept going. I thought it would draw it back up for these highs, looking for longs on the day. Now the reason that I would consider buying this gap right here is because if you look at the S&P made a strong divergence at 10 o'clock. That's 356. So ES went way below that low, but the NASDAQ did not. So I was looking at that divergence, and I thought to potentially long that. Didn't get me a fill, and good thing it didn't, right? And then I saw that the market just did this. It just fell flat, fell sideways, and was just boop, 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 barcoding up, down, and I walked away at like 10, 20. And I said, I'm done. I'm not trusting of this. And then here's where I started to get a bit frustrated. 10:05, I say I'm extremely frustrated. Price is just leaving without me after I was so close to buying it, but didn't pull the trigger. Now I have to drill my limit order up and hope I get filled somehow. Starting to get pissed off thinking, why can't I just catch a fucking move? The only place I can buy it where it makes sense to me is the 1 minute buy side melt sell side efficiency. If I use the 5 minute inversion fair value gap, my stop will get tagged. If it does trade to the 1 minute buy side and balance sell side efficiency, then I feel like if it drops that far, it'll probably make a new low day. So at this point in time, at 10:05, nothing is really making sense for me. And I really just don't know what to do. It's just left without me. I can't get behind the idea of placing. Whoops. Let me pull up the chart. Can't get behind the idea of using the inversion fair value gap, because if I were to get an entry all the way up here on this line, where would my stop be? My max risk tolerance is 25 handles. Where would I place my stop? Everything over here is, like, if I were to place it below the low of this fair value gap, then that would be 44 handles. If I were to place it at 25 even, well, that only gives me enough room for the market to trade down into the gap, maybe towards the upper quadrant of that gap, and that's it. So it doesn't give me a lot of room to work with at all. So the only thing that would make sense is for an entry on this gap right here. So going back to this, finally, I'm so down bad mentally. Every little thing the market does is not what I want to do. Drives me crazy and pisses me off. I feel like a victim and think negatively instead of just finding a way to deal with the situation. I continue to think negatively and feel victimized, therefore I continue to get negative results. I sit here unable to focus and tired, just drifting in my mind and feeling frustrated. So at that point in time, I knew that I got to get out of here. And at that time, what did I do? I shut my computer down and I moved out. And now here I am. How many hours later? 12 hours later? No, not even 12 hours later. Less than 12 hours later, here I am. In a whole different environment. So, this is it, guys. This is, I guess you could say this is a new beginning for me. Honestly, the best move today was doing nothing. If you've backtested price a lot and in depth around the economic calendar, you know that consumer sentiment Fridays tend to be really shit. And we had that today. We had consumer sentiment and consumer inflation expectations, or whatever that means. So the market literally was just flat. And one of you guys dropped in the comment section that ICT has mentioned that August is typically bad for trading, or August is a typically more difficult month. And I can clearly see that 100%. So looking forward to next week. Monday, Tuesday, probably going to be ass. The rest of the week should be good. And it's Jackson Hole Symposium. Wow. This is definitely a difficult month. Wow. Okay. So, I think that should be it for this one. It's going to be a quick video. Bad performance. Bad mentality right now. What does that mean? Pending growth. That's all that can mean. So it's going to be it for this one. I'll talk to you guys next time that I decide to trade, which is not going to be a Monday, 100%. Monday with no driver. Potentially Tuesday. I think I will show up Tuesday and see how it goes. Wednesday, Thursday, Friday could get pretty crazy with some crazy volatility, especially with Jackson Hole Symposium. So that's it for this one. See you guys next time.